next story is on FedEx. So we all heard that FedEx missed its earnings. FedEx shares plunged the most in a decade after the company's global express business showed its vulnerability to global trade disruptions. So we know that we're in a trade war with China. It's on again, it's off again, it's on again, off again, but it's definitely affecting companies like FedEx, Federal Express. Let's go analyze the stock. FedEx is in the list, 151, its price value at 145. This stock is currently overvalued. Upside potential, not good. It's below the value of 1. But it is a safe stock where relative safety is above 1, but the stock is going down in price. So, not a stock that I want right now, not a stock that I want to hold long term due to the upside potential as compared to a AAA corporate bond is not there. I do like that it's safe. Does it pay a dividend? Yes, it does, and it's got good dividend safety. This may be a stock that you will hold on to only primarily for the dividend. And Jerry says 4 downgrades on FedEx yesterday. But fundamentally, one of the fundamental indicators, relative safety, still says that it's okay from that perspective, that it should meet or exceed earnings. I bet you anything that that's falling. Let's do something here. View historical data. Nobody ever talks about this, but this is an indicator we have intraday. Let's go put this on end of day. I can watch the trend of relative safety over the last year. Relative safety, look at that. It's been pretty consistent. Even with all of the news coming out on the stock, the relative safety on the stock has been pretty consistent over the last year, between 1.25 and 1.19 or so. So the relative safety on the stock, that fundamental indicator, has been pretty steady. So that was a good little extra piece of information that you didn't know that you might have had to do, but I can track the history of any indicator over a 1-year period. So it's been pretty solid. Earnings, look at that big number as far as earnings is concerned, but they're only growing it by 1% a year. Interesting. All right, so yeah, earnings look good. Looking at the dividend safety, that looks good. But man, they're only growing their earnings at a clip of 1%. They probably need to do a lot better than that in order to get more and more people to actually buy into it. Let's go take a look at the graph. What does it look like? Woo! Yeah, so when the company grows their earnings by 1%, look at the graph. It's not pretty. Earnings, big drop off. Earnings did definitely a big drop off. Look at the 3 and the 8. Let's put this on a 3-month graph. Recently, the 3 and the 8, when they missed earnings, 3 and the 8 got hit. Right now, I'm not sure if I'm going to want to be a buyer of FedEx, or if I want to get and feel like I'm a genius, the stock could be getting a reprieve and bouncing back up, but I've got nothing to confirm that yet. One day does not make a trend. One day does not make a trend. And looking at this 3-month graph, I'm not feeling real warm and fuzzy about pulling the trigger on FedEx right now. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.